Summer is starting to pass and we're starting to move into fall and people are starting to go back to school. This is a great time to think about where we're at in the year for tax planning. The big, beautiful bill just got passed on July 4th. The longer we get from that and not take advantage of those tax savings, the more we're going to lose, because early adapters are the ones who can take advantage and position and pivot and transition quickly, because the early adapters who understand the incentives of the tax system, and as tax policy drives investment policy, we are taking these new incentives, new deductions, new credits, new exemptions, decreasing our taxes, paying it later, using that money, that time value of money, thinking smart and not just working hard, but really using these tools and resources to our benefit. And that's why I wrote this new guide, the ACEs. And so it's like playing your cards. You got to play your cards right. You got to have those ACEs. And there's a lot of ACEs in the big, beautiful bill if you can play. And so retooling, thinking about it, planning, thinking about opportunity zones, thinking about production facility credits, thinking about research development credits. Those things are all so important in reducing our taxes and being ahead of those, partnering with people and having multiple streams of income, multiple streams of deductions is so important. Let's connect, get my guide, and then let's talk about how we can reduce your taxes, especially if you own real estate and are a real estate investor. There's so many tax advantages, and I see tax returns on a daily basis, and it just drives me crazy because there's all these hidden phantoms and all these hidden traps that people are missing out on. They're not releasing and taking advantage of the tax savings now when they dispose of the property, because the items are still on the books and they should have been taken off the books. And so that's trap number one. Trap number two is they have to recapture it as if they did have it. And so they lose twice. And then third is time value of money. All that time, all that value, all that money is wasted because it could have been expensed and it's wasted and you have to recapture it. And so it's talk about leaving 2 or 3 tips. People hate leaving tips to the IRS. They don't mind paying their fair share, but they don't want to overpay. This is, people are getting hit 2 or 3 times and they don't understand. They don't know it until somebody like me points it out and says, stop the madness. We can do things differently. Stop the bleeding and help you to really take advantage of the tax savings for your favor instead of being used by it. Give me a call.